If you are wondering about cash flows from other than operating activities, in this video we will add in the story of a firm's cash flows from investing and financing activities, so you can have a complete picture of a firm's cash flows. A firm's cash flows are classified into operating, investing, and financing activities. We will now focus on cash flows from investing and financing activities. The investing activities of a firm involve investments in non-current assets of a firm. Another important part of the story of a firm's cash flows are its interactions with the capital markets, how it is using the equity and debt markets to fund its activities. These are a firm's financing activities. Non-current assets are those assets where we expect to gain a future economic benefit in the longer term. These benefits can relate to periods many years in the future and at least more than 1 year in the future. This means that a firm invests cash into its non-current assets with the expectation they will provide benefits to the firm in the longer term. Or, in other words, cash is being locked up into non-current assets in the firm with the expectation of growing its cash flows from operating activities in the future. Examples are investing cash into property, plant and equipment and intangible assets. The final piece of a firm's cash flows are its cash flows from financing activities, which are the result of its interactions with the capital markets. This includes a firm's borrowings, dividends paid to shareholders, issue of new shares, and purchase of its own shares. You may be asking how the concept of viewing a firm as having operating and financial activities that we studied in Act 11059, Accounting, Learning and Online Communication, fits in with the way we present a statement of cash flows into operating, investing and financing activities. In Act 11059, we saw that operating activities are a firm's interactions with the product and input markets. This includes deciding what operating assets to acquire or sell, what agreements to enter into with employees, suppliers and customers, as well as various other activities to add value to the inputs a firm acquires from suppliers. And we also saw in Act 11059 that financial activities of a firm are its interactions with the capital markets, with equity and debt investors. These concepts of operating and financial activities we used in Act 11059 are a little bit different to the definitions of operating and financing activities used in the classification of cash flows in the Statement of Cash Flows. These differences are: operating activities in the Statement of Cash Flows includes interest received and interest paid by a firm. We included these items as part of a firm's financial activities in Act 11059. Investing activities in a Statement of Cash Flows were included as part of a firm's operating activities in Act 11059. And financing activities in a Statement of Cash Flows are all included as part of a firm's financial activities in Act 11059. There are no standard terms in accounting, and the same or similar words can refer to different concepts. This is the case with the use of the words operating and financial. For further information on cash flows from investing and financing activities, go back to Chapter 7, Section 7.4 in the study guide, and also review the Statement of Cash Flows weekly questions. Also answer, write and rate questions on cash flows from operating activities in Peerwise.